Good afternoon, everyone. I'm Piyush Bhandari, your accounts teacher. I'm here today with the same topic which was going on in the last class, that was Introduction to Accounting. Today's presentation will emphasize on the recap of the meaning of accounting. Then bookkeeping will be undertaken. After that, types of accounting information and qualitative features of accounting information will be discussed. And lastly, the uses of accounting information will be taken. Let us revise the meaning of accounting, the introduction of which we started. Accounting is a systematic process, a disciplined process, which includes series of interrelated activities. And those activities are identification of financial transactions, measuring the financial transactions in terms of money and economic value, recording the financial transactions in original book of entry, which is called journal, and its various types of journals, and after recording, posting all the financial transactions in principal book, which is called ledger. So this is called classification or classifying, and after that summarizing, ascertaining the net result of the business in terms of profit or loss and in terms of depiction of the financial position of the business. After that, whatever result has been ascertained, that result is analyzed, studied in depth to present in a simple form so that that is communicated, that is informed to the users or the interested party of the financial information. So I repeat the meaning of accounting, that accounting is a systematic process of identifying, measuring, recording, classifying, summarizing, analyzing, interpreting and communicating the financial information to the users. Now, there is a term which is called bookkeeping, which is familiar with accounting. So let us know what is the meaning of bookkeeping. Bookkeeping is a part of accounting. Hence, it's a process of recording financial transactions and events in the books of accounts. So it means bookkeeping is a part of accounting and it is confined to till classifying. That's it. Now let us see what is involved in the bookkeeping. Bookkeeping involves 4 steps. 1. Identifying the financial transactions and events. I hope we all know the meaning of these 4 steps. So bookkeeping involves first identifying the financial transactions and events. Second, measuring them in terms of money. Third, recording the identified financial transactions and events in the books of accounts. And lastly, classifying the recorded transactions and events in the principal book, which is called ledger. So classifying recorded transaction and events, that is posting them into ledger accounts. Now let us see, is there any difference between bookkeeping and accounting? Yes, there is a difference between bookkeeping and accounting. What is that? Let us know. First is the scope. Bookkeeping is concerned with identifying financial transactions and events, measuring them in terms of money, recording them, in the books of accounts and classifying them in the book which is called ledger. So far as accounting is concerned with summarizing the recorded transactions, analyzing, interpreting and communicating the financial results. So it means accounting is a comprehensive term and a bookkeeping is a part of the accounting. Now the second difference is related to the stage. What about the bookkeeping? Bookkeeping is a primary stage. It is the base for the accounting. It provides the base for the accounting. Whereas accounting is the secondary stage. It begins from where the bookkeeping comes to an end. And the third basis of difference is purpose. What is the purpose of bookkeeping? The purpose of bookkeeping is to maintain systematic records of the financial transactions, whereas the purpose of accounting is to ascertain net results of the operations and the business activities, as well as showing the financial position and to communicate the financial information to the interested parties. Now the next base for accounting and bookkeeping difference is nature of job. What is the nature of job of bookkeeping? The job of bookkeeping is very routine in nature. Anyone can do that. Whereas the accounting nature is analytical and dynamic. Everyone cannot do unless and until one has gone through the training and education in the field of accounting. Next is performance. The base of difference between bookkeeping and accounting is performance. So, since bookkeeping is of a routine nature, hence it is performed by the junior staff, whereas accounting is a specialized nature function which is performed by only the senior staff, professionals, by the experienced. And lastly, the basis of difference between bookkeeping and accounting is special skills. Means whether bookkeeping requires any special skill and what about accounting? Let's see. Bookkeeping is mechanical in nature and thus does not require any special skill. So far as accounting is concerned, accounting does require special skills and ability because it requires analysis. It needs interpretation and it needs communication. Everyone cannot analyze and interpret unless and until one knows the process of analysis and interpretation. Now, let us move to the next one, that is, we talk about accounting information, financial information. So what exactly is the accounting information and the financial information? Accounting information refers to that information in which the people are interested. Accounting information refers to the financial statements which have been generated through the process of bookkeeping, uses of which helps the users to arrive at very important decisions related to the business. The financial statements so prepared are the income statements and the position statements. Income statement may be called as profit and loss account. Before profit and loss account, trading account is prepared. So income statement consists of trading account and profit and loss account, whereas position statement is also known by the term balance sheet. So this information which is called the financial information or the accounting information, it is made available by these statements, that is income statement and the position statement. So these statements, they provide the information, and that information is information relating to profit, information relating to financial information, and information about the cash flow position in the business. Now, information related to the profit, how this information is provided? This information is provided in the business by income statement. Income statement is the statement which is prepared in order to ascertain the profit, earn or loss, and that is also called income statement. Trading account is prepared. Trading account is prepared to ascertain gross profit or gross loss, and profit and loss account is prepared to ascertain net profit or net loss. So this information is utilized by the interested parties, which is one of the very important accounting information. The second one is information relating to financial position. Financial position is ascertained by preparing position statement. In other words, it may be called by the name that is the balance sheet. Balance sheet makes available the information about the financial position in terms of assets and in terms of liabilities. Assets are the things which are owned by the business. Whatever things which are of business, they are called assets. For example, amounts which are yet to be received, the cash available or the bank balance, the balance available in the bank. And there are liabilities which are depicted by the balance sheet. Liabilities are the amounts which every business owes to outsiders in terms of loans, in terms of making the payment to the creditors, and the capital also, because capital is also a liability of the business. The amount which is invested by the businessman in the business is also a liability of the business towards the businessman. So there are two types of liabilities which every business has. One is towards the businessman, that is owner, and another one is towards the outsiders. Now the third type of information which is provided by the business, in which large number of parties and users are interested, that is about the cash flow. There is one statement which is prepared which is called cash flow statement. That cash flow statement is a statement that shows flow, both inflow of cash and outflow of cash, of the cash which is received and paid during a specific period. And this cash situation, this cash position in the business is of very important use, as many decisions are taken by the management on the basis of the position of the cash, like payment of liabilities. Payments have to be made to the outsiders. If there is a sufficient availability of cash, then the payment can be made. And if there is a sufficient cash, then the management can think of expansion of the business. So this is possible, these all decisions are possible because of the availability of cash. Hence, the financial information is related, which is related to the cash that is also provided. Now, let us move to another important concept in accounting, that is, there are certain features of accounting information. Generally what happens, every information is not reliable. Every information which is given, that may not be understood. The information which is provided, that may not be worth comparing with others. So there are certain inherent features in every business organization's accounting information which must have some quality in it. So the qualitative features of accounting information are 4, which are very important, and every business organization's accounting information must have these features. First one is reliability. Accounting information must be reliable. Reliability of information means that information must be verifiable. That information must be supported by some proof, some evidence, some source documents. So if any interested party wants to check, wants to verify that whether this accounting information is authentic or not, so that can be verified with the source available, with the evidence and proof which is available in documentary form. Hence, that information must be free from bias. The accounting information should not be biased, it should be unbiased, and it should be free from the errors. The second one is the relevance. Relevance, accounting information should be relevant to the users of such information. Means accounting information is relevant if and only if it meets the ends of, it meets the requirement of the interested parties and the users, which could further help the users in taking important decisions for the benefits, for the improvement of the business. The next feature is understandability. Understandability means that the information which has been provided through the financial statements, it must be presented in such a way that the users, the interested parties, are able to understand that. In a simple, in an easy form, the information should be provided. And the last feature is comparability. Comparability means that the users should be able to compare the accounting information of the business of the period, first one period with another period, and then the accounting information of one business is compared with the accounting information of another business. So these are 2 types of comparisons which must be possible by the accounting information, and that comparison is intra-firm comparison and inter-firm comparison. Intra-firm comparison, when the one period of one business is compared with the another period of the same business, this is called the intra-firm comparison. And inter-firm comparison, the accounting information of one period of one business is compared with the accounting information of the same period of some other business. So this is called inter-firm comparison. So accounting information should have all these qualitative features which make the accounting information an authentic information for those users and interested parties in the financial information of the organization. Now let us move to the next topic, that is the users of accounting information. Users means those individuals or those parties who are interested in the financial information, in accounting information of the business. The first one is owners. Owners are the ones who contribute money in the business, and they are exposed to many risks. They are interested in knowing profit has been earned by the business or loss has been incurred by the business. Along with this, they are interested in knowing the safety of their capital, whether the money which they have invested is safe or not. So the financial information, they give the information about the profit or loss and the financial position of the business, which could satisfy the owners. The second one, users are management. Management take extensive use of accounting information because they are required to take a number of decisions. They are required to arrive at important decisions such as what will be the sale price and how to reduce the cost, how to reduce the expenses. If they find it difficult to reduce the expenses, then how to control the cost and the expenses, and whether in the business sufficient profit is there, sufficient cash is there for the expansion of the business in the future. So these are very important decisions which are taken by the management with the help of accounting information of the business. The next, internal users, they are employees and the workers. Employees and workers are entitled for a bonus in every year, which is linked to the profit earned by the business. Hence, they are interested in knowing what is the result of the business in terms of profit or loss, and what is the financial position of the business. Now, the next are the external users, those users who are outside the business, and they are very much interested in knowing the accounting information. The first one is banks and the financial institutions. Banks and financial institutions are very essential, important part and element of every business, because banks and financial institutions, they provide loan to the business organization, and naturally they will be interested in keeping an eye on the performance of the business to know whether the business is making a progress, and if the business is making a progress, their money is safe. The loan which has been given by the banks and the financial institutions, they want the safety of the loan and recovery of the loan, and above all, the interest which they will receive from the business organization. Will the business be able to make the payment of the interest in due time, and the repayment of the loan will be possible by the business to the banks or financial institutions or not? So for all these information, banks and financial institutions are interested in accounting informations. Next, investors and potential investors. Now, investment, when we think about the investment, means there is a risk. Every investment involves risk. And the investors, they don't have a direct control over the business affairs. Therefore, at times, large companies are there. The ones who invest money in shares, they can't participate in the business. So just by going through the financial information of every year, they collect some information and they decide that whether their money is safe or not, the money which they have invested. And potential investors are the ones who are planning to invest in the business, but they have not yet planned. So in order to arrive at a decision, should they plan or should not they plan, they are interested in knowing the financial information. They compare the result of the financial information of a number of years. They see the ups and downs of the business in terms of profit or loss, or in terms of the financial position as well as the cash flow position. On the basis of comparative analysis of the business organization's accounting information, they arrive at a decision that should they invest money in the business or not. That is called the potential investors. The next user and the interested party are the creditors. Who are the creditors? Creditors are those parties who supply goods or services on credit. And it's a common practice that large number of suppliers, they remain invested in credit sale. Suppliers are the ones who sell the goods and the raw material and the services to the business on credit. So before granting credit in terms of goods and services and raw material, they would like to ensure them that whether the business where they are supplying the goods on credit, that business has credit worthiness or not, whether the business will be able to make the payment to the creditors in future or not. So in order to have such decision, the creditors, they are interested in the accounting information. And the next one, government and its authorities. Government is also interested in the accounting information because government levies different kinds of taxes on the business. Everybody knows income tax, everyone knows GST. So government wants to know whether the business organizations are assessing the correct tax which is due to the government or not, and whether they are making in-time payment of the tax or not. For such kind of decisions, government is interested in the accounting information. The next, consumers. Consumers are also interested. Why consumers are interested? Because at times the prices of some products are fixed by the government. So it needs accounting information to fix fair prices. So whether business organization are fixing the correct price or not, in order to know this, consumers are interested. The next, researchers. Researchers, they use accounting information to carry on their research work. At times, a number of individuals, they undertake the research on various topics which have a direct concern with the business organization. So to carry on their research, they take the help of the accounting information. And the last one is public. Now the members of the public, they want to know that whether the business which is earning large sums of profit and having a good financial position, are they contributing to the people of the society? Are they providing employment to the people? Are they giving support to the suppliers? Are they making payment in time to the suppliers? Thus, this accounting information provides very much useful information to the various users for taking the decision. Now here we come to an end of our class, and I hope you might have purchased the books and might be reading all the concepts. So with this hope that whatever we have covered today, you shall positively be reading from the book. Thank you.